Hello, friends. Welcome to Pro Trading Zone. So, today, another day with action packed chart patterns, action packed dreams that we would have been for making a huge profit. But market plays its own role in making things difficult, making things easy. If you know the things, you get it easy. If you don't know the things, every turn in the market would be difficult for you. So, today, we are looking at the chart patterns of year end as well as month end as well as weekly expiry. So today was really special, and the thing was that it went up yesterday but it closed extremely flat today. The market was just 39.3 above the yesterday's close. It is as flat as comes in the market. Before we look into what exactly happened, we will look into some price actions that happened in the market, what exactly happened in the bank nifty, what were the crucial pivot points that we need to look. So pivot points, here you could see the market has been on the sideways, but before starting of the day we draw some pivot points. So these pivot points are generally drawn from the important pivot points of the yesterday, a week before, or something that makes sense to us in a very long time frame chart. So very long might be 1 hour time frame, or it could be something like a day's chart. So right now over here, if you consider these four pivot points, first one was 36,746, second was 36,498, third was 36,252, fourth was 36,070. These were the four important pivot points that we took today, but yesterday also we took 36,070, 36,252, and 36,498. These were yesterday's important pivot point as well. But before opening, we chose these four pivot points and it worked wonders for us. If market would have opened below, we would have considered 35.807 as an important pivot point for us. So as market opened approximately 150 points up and it went sideways later on. But as soon as it opened up, it started coming down. So as it started coming down, as in yesterday's, it came down, then it started going up. This was my notion that today also market will come down, then start going on the sideways. Considering that factor itself, I considered that market would be going up. I need to wait for some time. But after waiting for some time, I found that market is going sideways, or it wouldn't be making much of a trending day today. So we took a trade. So the strategy we implemented today was short straddle and short strangle. So we took our trade at approximately 36,500 at around here. We took our 36,500 trade.
Our strategy at 35, already put up our strategy at 35,500, and market has been going steadily up, and we will see what happened in our short straddle and short strangle. The important pivot point for us is 36,746 and below is 36,250. So we have put in a short straddle with a strike price of 36,500. Call and put, we are looking at a loss of 0.12%, that is 20,625. We have put in a short strangle with strike price of 36,600 call with a premium of 105.75 and a strike price of 36,400 put with a premium of 109.85. We are looking at a loss of 0.14% right now and 22,625% as a loss
At approximately 9:40, and we waited for that trade to play out. So basically we decided that if market goes above 36,617, we are going to cut our position and let our short position of put to ride to for profit and close our call short position. Similarly, if market would have gone below this pivot point, we would have cut our call put short position and let our put short run. And if it would have reached over here, we would have booked our profit. It would have reached, market would have reached here on this pivot point, we would have cut our profit, because we do not give into for greed. If market would have done this much of uh, way to the downside, we would have made handsome profit and we would be happy with it. And later on we decided that it is not wise to be in this market, as delta would be playing a big role today, as well as theta. Even though theta was falling, making the premium go low very fast, but we wanted to be very safe. So as soon as market came over here, I saw that I was making a profit of approximately 0.7% in strangles, So I exited my trades. Here is the short.
So market just turned around from our pivot point, that is 36,500, and coming down again. You can see there is some price action around 36,500. But we are okay with this thing and we are exiting all our trade in profit. So in short straddle, we are making a profit of 94,625 rupees in 36,600 call and 36,125 profit in short put of strike price 36,400. Total we are making 1,30,000 profit, 30,750 profit, that is 0.78%. In short strangle, we are making a profit of 1,17,875 in 36,500 call short and 36,500 put short is making 31,250 profit. Total we are making 0.88% profit, that is 1,49,125 rupees.
So you can see we made a good profit even though we just stayed in the market for not more than 1.5 hours. We made a profit of more than 0.7%, and that's the beauty of the zone trading. So zone trading is basically that you take a short straddle and short strangle, that is a non-directional trade, and you do not make any other trades once you take a short straddle and short strangle strategy, and you only take trades when a important pivot points is breached on either of the side and let other side run. That is, if you see that market is running on one side, you take a directional movement into it. Until then it is considered to be non-directional, that will make money for us, and similarly the same thing happened. So you can see we made a handsome profit and we were not worried about much in the market and what market was doing. And once we exited our trade over here, we just totally came out of the market and didn't bother to do much, because whenever market gives you a good profit, you take it and embrace it as a reward. You do not jump in the market and try to make sense out of it again, because market rewards you wonderfully if you are able to keep it. So once if you would have again jumped into the market and tried to take a trade, it would have created a nuisance for you, or it would have destroyed your trading psychology, as it would have made so many patterns over here that I would be discussing the next. But if you make good profit over here on your portfolio, you just stay out of the market, and one trade is good enough to make a wealth. For now, the chart patterns is something that we are looking into. This chart pattern generally talks about the trend of the market or something that tells what market is going to do. So chart pattern generally helps us to understand what trades to be taken, but I don't really rely on every chart pattern, and I consider few chart patterns to be stronger than other. But today it was a mixed bag of all of it, and we are going to see few of the important chart patterns that I found in the market or would have played tricks with a directional trader. The people who do not do zone trading that I teach would be in a big mess today and would have created a nuisance for them. They would have taken multiple trades with thinking that they are going to make good money, but it would have always turned to be a bitter sour experience for them. So you can see that I have created 3 downward channels today. This was something you can look in the market and just say, oh my god, this is going down, and you just take a trade, and it is not much of a trade. It is not a movement of more than 200 points. So even though you would have taken a short position over here, you could see this candle. This would have messed up with your psychology, because if you have considered 36,498 as your pivot point, it was just showing big bold green candle over here. Then again there was a big green candle. This would have definitely triggered few of the people and would have exited their trade and would have booked profit or losses over there. In the same pattern, there were three good channels that form, but this was the most beautiful channel that would have helped a non-directional trader. So in every case you would have seen that market was started coming down. So in a downward channel market, we always assume that once there is a pole formed and a flag or a downward wedge, we expect market to jump exponentially up. But either of the time you would find there was not a rally of more than 200 points. So this would have created a nuisance for the option buyer, because theta was really high today and it was just chopping off all the profits they were making. So an option buyer would have made a loss, but an option seller who would have sold their short puts over here would have made a good money, because market went up and they were making a good profit because of theta decay and as well as the delta that they have gathered over here. And I will show you few more chart patterns. One more chart pattern that you would have considered was this head and shoulder pattern in the inverted format. This head and shoulder would have created a very high spirit in you that you should go long over here, and as you can see, this could have been a good trade, but immediately when it showed a really good strong bullish candle, it immediately showed you a bearish candle, strong bearish candle. So whenever this happens, generally there is a trend reversal immediately and market started going down. So anyone who would have gone long over here or shorted the put would be in a mess over here. So this would have created a really bad problem for them. Another chart pattern that formed today was M pattern. This M pattern would have created a notion that market is going to go down. Pattern was a good one, but it would have created a nuisance for you, because if you see the proper arrangement of these red candles, you will see that it was showing a green shoot before it turned to be red. If market is showing a downward body position, it also means that it was showing a huge green candle over here and would have messed up with the trading psychology over here. So we do not expect market to give you a simple money or easy money when you are doing directional trade, but market rewards you to earn good money when you are doing a non-directional trade. In our system, we wouldn't have made any of the changes in our original position if these candles wouldn't have formed. If this would have been above this, all these chart patterns were not much worthy for us. Until and unless this inverted head and shoulder pattern wouldn't have crossed this zone, we wouldn't have taken any trade. This would have helped us to avoid so many bad signals and constantly eat theta in the market. So these were the analysis for today. Please like, share, subscribe if you liked my analysis. And if you want to follow me in the live market, you are most welcome. Please subscribe to my channel. I put in live shorts every day, which tells about my understanding of chart patterns, pivot points, strategy that to be needed to be applied, and what are the chart patterns that are happening. And I also tell exactly the point where I took my trade, so you can analyze your strategies and your analogy of the market with my thought process. So at the end, please subscribe, tell your friend who is in need. Come make money with me in the market. Thank you.